Hello and welcome to another update. So we want to take a look at the GDX today. I think a very interesting one, and I was going to do an analysis on this anyway for one of our members who requested it. So I thought, well, that is a good time actually to make a video on it as well. And I think we covered the GDX once before on this channel. But definitely interesting because it can be easily traded as an ETF. So what we're dealing with here on this, and this is the long-term charts, it's not so meaningful for anyone who's sort of looking for medium-term or short-term, but looking at the long-term, I mean, it's not the clearest uptrend, okay, but we are in an uptrend, certainly not in an impulsive uptrend, but we're dealing, and that is my interpretation, with a diagonal pattern, and we could just be in the process of starting that third wave. In my updates over recent months, I've covered it a few times. I've highlighted this yellow zone as a support area, a reversal area. The price used it a couple of times to form a reversal, and we could be in our breakout, and that is very much in line with my analysis for gold. In this scenario, from this wave 2 low, which formed in March 2020, which formed at around $16.30, a larger degree third wave to the upside is unfolding. We're dealing with a diagonal, so the third wave is an A, B, C structure. I'd like to get this third wave somewhere into the region where we can calculate that. What do we normally want from a third wave? Looking at the bigger picture, should get to $60 roughly. There's a good Fibonacci confluence there as guideline target. That's based on the measurement of the larger 1-2 setup, or what we can also do is measure the length of the wave A, go to the low of the B wave, look for the 100% extension, and that points also to round about $60. So there seems to be really good Fibonacci confluence, and the $60 mark is the 1.618 extension of circle 1-2 here. But if we then zoom in a little bit, and what we want to take a look at is the C wave to the upside, which started down here in September 22. So this is now where it's getting a bit messy. This is short term. My interpretation is that the B wave bottomed. We had 5 waves up, so I call that wave 1 of wave C of the larger third wave. Yeah, that's the idea. So if this is wave 1, then obviously the pullback was wave 2. So we have a bit of a, I'm not entirely happy with this structure. I think that is how I had it before. I mean, it did work, but you know, if I have it like that, I will struggle with this circle wave 3 with a microstructure for the price to reach the circle wave 3 minimum or ideal targets. So the minimum target is $49.27. Better would be $53 or higher. But with this move up, we are not going to reach it. So I thought about, okay, what I could do. And this is a great example of where we need to have a context. And based on the context, we can then work out the micro. It does make more sense if I call that here another 1-2 setup and actually bottomed here in October. Should need to change the wave degree now. In October 23. And this is another 1-2 setup. Now the problem here is why I didn't do it before, because it really came very, very close to invalidation. But it does make sense. It is at least a plausible interpretation to call that another 1-2 setup, which would be bullish, because then we could be working on something like that here. And it would really make it much better, you know, make it look much better in terms of proportions. Because then I've got a 1-2 setup, which is quite bullish. And we're now moving up in circle wave 3. Circle 3, we actually broke above this previous breakout point. I can take that one out now. That gives me the following wave count. It gives me a count where we say, okay, we are now in circle 3. We could be within wave 4 of that larger third wave. And we just need one more high in wave 5 of 3. And then we get another 4-5 pattern to complete this larger third wave. That is one interpretation. In this scenario, I think we're very close to, yeah, we really need it. I mean, this needs to be the low, right? This needs to be the low, the last one here, which formed at around 33 USD. Because any break below the 50% fib level means I have to reinterpret the chart. So that's one interpretation. Yeah. Another one would be to really call this another series of 1-2 setups, but I don't really like that idea. Okay, but what would happen if we break below $33 here or $32.90? Well, I mean, I might need to call that really another 1-2 setup, yeah. It would then look a bit strange because this would be very long wave one, but that is probably what I would have to go with. But then let's dive into the micro. I mean, this gives us a very clear invalidation point, yeah. But we could see invalidation. We could see invalidation because what I would really like to see now, if really a fourth wave bottomed here, this here should get one more high ideally. Then we have 1, 2, and it could move up like that. So I'm running out of wave degrees here. Okay, this would need one more high. I've got 3 waves up now. There's a small 1, 2, 3, 4, and I'd like to see that high. Ideally, it should form from here. Get just that one more high, and then we call it a wave 2. Okay, maybe you can, because we are in a 5th wave. 1 second, we are in the smaller 5th wave here. You can get away with calling a wave 1 a 3-wave move because we would then be moving in an ending diagonal, but that's not great. So ideally one more high that would break above $34.80, that would be ideal. And to maintain this perspective, it would really need to hold that last low there, the 17th of June low at around $32.90. Yeah, what would happen below it? As I said, you know, I might call that another 1-2 setup. We would then need to reinterpret the chart and the support area in that case, but it would make the chart less clear. The support area in that, let's say, alternative scenario would be down here. But believe me, I'm not in favor of that scenario. It's also likely that we break support. I mean, you know, of course support can break, but it would make the chart just a bit less clear. Yeah. I think we can call that possibly a 5-wave move up, but it would be clearer with one more high, which is what I prefer. So that's how what that would be the alternative support area for a deep pullback between $27.80 and $31. It wouldn't make it bearish. It would just be an alternative support area for a deeper pullback. That's at the moment the GDX analysis. So that means in summary, I'm primarily watching for one more high and direct trend continuation. I would have to change my view below $32.90, and then we could move towards the $50 to $60 range. Hope you liked the update about the GDX. If you did, please hit the like button, leave a comment and subscribe. And if you're interested in daily updates about the S&P 500, as well as regular updates about stocks, feel free to check out our stocks and S&P 500 service. You'll find the link in the description. Thanks a lot for watching. Bye-bye.